What's up, chat? Today is January 15th, 2026. And today, I took an L on the S&P 500. But that's okay, because that's what trading is about. It's about winning and losing. It's not always about winning, because if everyone was able to win all the time, then every person that is a trader would be a billionaire. But that's not happening. So losses are part of the game, and I'm okay with that. And honestly, one of the ways I deal with losses is just kind of relating it to like spending money. I mean, when you go out and spend money, you're basically losing that money that you earned. Whether you're going to the grocery store, getting gas, eating out, going to Topgolf. That's what I relate it to. Is just okay. I'm just spending money to make more money. And today it was just one of those days where I went shopping at Walmart and I lost money. So it is what it is. That's one thing I'm working on this year, is just managing my emotions. I feel like I was just too emotional last year. Even though my trading was improving, I was just still emotional. I was still attached to the outcome of what happened with my trades. And to be honest, it kind of gave me a reason to, love myself more, with trading. And trading shouldn't be about that. It doesn't matter if you're a profitable trader or unprofitable trader. It shouldn't affect how you look at yourself. So that's one thing I'm working on this year, is just, not letting trading affect who I am as a person spiritually, and just letting the pixels stay on the screen, not coming out of the screen and affecting me mentally. So that's my little rant about where my headspace is at right now about my losses. But let's just get into why I wanted to go short. Let's go to the higher time frame. So when I hopped on this morning, you can see we made a big move down yesterday. Okay. And then on the hourly, we made a big move up. So I was thinking, okay, well, us making this move during London session is probably just a retrace to equilibrium for shorts, which it did look like it. And then obviously I mark out New York session open, London session open, and Asian session open. And then as soon as I gathered, my bias, like, okay, I'm pretty sure most people took shorts today, because obviously when you see a move like this and you think market wants to come down and sweep these lows before continuing higher. So then I just got onto the 15-minute, waited for market to open, and this is what we were dealing with on market open. One thing that I was paying attention to was NQ, because we had this fair value gap right here. And when we opened up, we were respecting it, but then I saw we started making this move down, and eventually we closed underneath this bullish fair value gap, giving me a bit more confluence to go short. Then I just got down to the 5-minute. We broke structure right here on this candle at market open. On ES, we were still on an uptrend, so that's another thing that I was being cautious for, was I wanted to see ES break structure to the downside, because that's like one of my methods, is I call it the double confirmation method. You want double confirmation of your bias on every time frame. You just want every single confluence to be respected. So as soon as I saw ES break structure right here on this candle, then I just get onto the 1-minute. Again, double confirmation. Want to see bearish order flow getting respected before I even think about entering. And one thing I was paying attention to after that 5-minute break of structure was this bullish fair value gap right here. As you can see, we were holding strong in it, but I felt like the market was just manipulating before making a gigantic move down, which that never happened today. That was just me anticipating what was going to happen, not reacting to what was going to happen today. So as soon as I saw this candle close beneath this bullish fair value gap, that's when I entered. Put my stops right here on this 1-minute high, because that's where bearish order flow would be invalidated if we went above these highs, which eventually we did. Came back down, stopped out longs, and then continued higher. Another thing that I did not pay attention to was the VIX. Honestly, I should have paid attention to the VIX today, because the VIX was not positive. And when the VIX is positive, that means shorts are going to play out. But today the VIX was actually negative. So that's one thing I should have paid attention to today. That's another thing I could have used going into this trade, was paying attention to where the VIX is at. And the VIX was not positive at all. It was negative. So when it's negative, that means the market's going to go up. When it's positive, that means the market's going to go down. So I'm going to be more aware of the VIX before entering trades too, if it's positive or negative, and if it's going towards that bias that I'm leaning towards. So that was the trade for the day. Thank you guys so much for watching. I'll catch you guys in the next one.